For the investor looking to diversify his portfolio, managed futures funds make an ideal choice because of their low correlation to other asset classes. So says our next guest, Alex Moiseev, Chief Investment Officer for Dighton Capital Management, joins me now. Alex, thanks for coming in. Let's get the macro stuff out of the way first. Double dip?
I don't believe so. I don't believe immediate double dip. If you're going to see it with the retail crowd, it's majorly underinvested as far as the small institution speculative hedge funds. I don't believe it comes immediately from the technical perspective. Okay. But I wouldn't rule it out next year if we'll see the basic consumer inflation going to filter on.
And how do you position in this area managed futures in light of a double dip coming, say, the middle of next year?
I'm not positioned at all. I'm 100% in cash at the moment.
That's right.
Yeah, and basically our fund is trading funds. It's not we're not positioned over long term or awaiting specific market events. We're trying to trade immediate opportunities and technically supported and what's going to come in the near future.
You know, when we look at the volatility in the FX markets and how that's come off, we look at the volatility in the equity markets, how that's coming off as well. What are we seeing in terms of volatility in this space?
You're talking about the economy? You're talking about the equity?
No, I'm talking about very much the space that you're operating in, the managed futures space.
First of all, we've seen the capital flowing into the managed future space. Not as an asset class, because you can't tell this is the asset class. This is basically completely different managers operating in completely different areas with completely different underlying assets. You can't count it as an asset class. As a space, you see money coming in. We see incredible interest from the people.
But given the volatility that we see in this space, why when we look at the volatility coming off in other asset classes, why would institutional clients want to put their money into this space?
So far, last couple of years, there is no asset class was performing. Basically, the institutions and as well as the retail investors, they're going to be looking for alpha, and they're seeing that the managed futures is able to generate some alpha. That's, I think, everybody looking to the managed futures. But you have to be careful just to see what is really what's managed futures. It's completely different spaces over different asset classes. Yeah. You have to be very careful picking the managers. Then basically picking the managers, not the asset class.
You closed out your long coffee position very recently, right?
Yesterday, it was beginning of September.
Okay. How much did you make on that? From where to where did you go? Because we're up at what, 190 or something now?
Yes, it was from an average mid 130s to 185. That's
okay. So is that it for coffee now?
No, I don't believe so. It might go a lot higher. For us, it's just the risk reward. It's not meet our requirements anymore. If we're going to see any catalyst as a drought damage or frost damage, it could go well over those historic highs, over 3 something. Go for $5–10 easily, I think.
What's the next big thing in commodities?
They're all, I think, going to be shooting in the next few years, spiking up. Just with the basic need inflation.
So all the softs
I believe softs are not done yet. We will be spiking, but I wouldn't position just blindly on the long side. I would be probably positioned on the good dips and on the very good on the good technical points from the technical perspective. Okay. Because in many of them, most of the moves are done, and they're going to be big trading range, but upper range.
I mean, do you speak very generally about the softs? What do you like specifically in the softs?
At the moment, nothing, because technically none of them meets our criteria. Okay. But for us, it needs to be on the long side. It needs to be very oversold, and the retail should be out of the long side.
What about gold? I want to get your view on gold. Soros spoke to us today and said it's going to continue to go up. He's not alone thinking that, of course. Where do you see that going, and what is your view?
I think it's just in the mid of the circular bull trend. It's basically going to come to the point when every institution will have the requirements to own gold as the only performing assets in the coming years as a hedge. Then this craze should go to the retail. And once going to be a lot of vehicle like ETFs, ETFs developed. I think once everybody on the street is going to be talking about gold, which probably a few years from now there is a bull market going to continue.
Okay, very good, Alex. Thanks a lot for coming in today.
Thank you.
Alex Moiseev, to keep up with the latest on the hedge funds industry, Funds Hub, our Reuters blog, is a good place to start. That address is there at the bottom of the screen. Coming up, Monday's Fund View, the manager of M&G's Global Growth Fund on his appetite for companies with difficult-to-price assets. I'm Axel Threlfall. This is Reuters.
As wealthy investors struggle to navigate a challenging market environment, diamonds are getting a second look as a store of value in tough times. WealthBriefing.com editor Tom Burrows takes a closer look at whether diamonds can be an investor's best friend. So, Tom, I've been trying to convince my husband of this for years. Why diamonds?
Well, the reason why you should keep plugging away is because the diamonds have shown the same kind of price growth, and since the start of this year, for example, as is the case with gold. Diamonds have also developed a great deal as a market in terms of an investment market in recent years. There's much more price information. There's more of an attempt to create a genuine index about how well diamonds perform overall. Because in the past, diamonds have been such an individual market, it's not been possible to have the same kind of pricing clarity as is the case with gold in terms of things like simple metrics like weight. Is that diamonds have become a much more easy market to invest in over the last few years.
Is it easy enough, though? I mean, there have to be a lot of risks. Gold has a huge, long history, so much liquidity out there and transparency in that market. Is diamonds at all getting to that level?
No, I mean, I think it's important to bear in mind that this is still a fringe market for any serious investor overall.